Combine the two of them and you get results like we have, where people are making their first payouts ever. 𝐒𝐰𝐲 has since gone on to make over $14,000 with FTMO, and his first payout was just in February of this year. All right, ladies and gentlemen, welcome back to the Simple Markets channel. My name is JB, and today we're going to be going over the unequivocally best way to approach prop firm challenges. This is by far the best way to approach them, and obviously the proof is within our community here. We are currently sitting at 71 funded members out of just 156. We are closing in on a 50% funding rate, which is the highest in the industry. So I really want to break down how we achieve that and how we teach our students to approach different challenges for the best chances of getting funded as well as payouts. Now, some of you may not know this, but we actually do have a new zero to funded program that we dropped. And this kind of goes back to the point of this video and even what I just showed before. But the Simple Markets coaches, myself, Andre, and Sven, are at a point where we can guarantee that you get funded, because at this point we've taught over 70 people to get funded through our strategy, as well as the different steps in programming that we take when we teach them. And the main point of this program is kind of that accountability or guarantee that yes, when you join, we will get you funded. We already have a few members that are enrolled and we're working with them currently. And then of course, there's many perks here as well. Like we will buy your first challenge. We'll give you lifetime access to the community. And we even have an FX replay account for you so you can backtest and practice. That is one of our stages in the system. But I want to throw that out there kind of to reinforce the idea of what we're going to be talking about here, which is we really do know what we're doing when it comes to prop firms. Our community has over $10 million in assets under management, well over $100,000 in payouts. And today we have a super corny but quick slideshow I'm going to be showing you guys. Now, I say to you guys all the time, I am a trader. I am not an artist. I don't make the best slideshows. We get it. But listen to what I'm saying. Follow along here. And I can promise you by the end of this mini slideshow we're going to go over here, you will have a much greater understanding of how to approach prop firms. Now, one of the first things that we're going to talk about is specifically time. And this is something that so many people get wrong. This data here is honestly what most strategies end up looking like. They may not be negative or in drawdown overall, but they tend to stagnate for a very long time. This could just be because your strategy isn't optimal. And then there's other reasons as well that we will go over in the next slide. But if your data looks something like this, the most important thing that you can do is cut it down quickly when you can, remove this ego that you have behind that prop firm evaluation, and understand that your goal, if you want to truly be funded and make money in this industry, is going to be speed. If there is one trader who doubles his risk to 2% to pass or fail his prop firm challenges very quickly, let's say within a month, he has 3 tries to pass in the same amount of time that you are taking to pass one challenge, because you're spending months on it, trying to climb yourself out of drawdown, trying to stagnate around break even and hope that you get that breakthrough in your edge. I have this $99 highlighted here because at the end of the day, guys, for most of you, you're spending maybe $99. In 3 months, that is not going to matter to you. And especially as I talked about before, for the trader that doubles his risk, he's going to pay $99. He might fail because he doubles his risk. He might pay another $99 and then fail. But by the end of month 3, assuming the other challenges take a month each, because he increased his risk and assuming the other challenges took 1 month each, by the end of month 3, his 3rd try, he could pay that $99 again, take all the learning experience from the previous 2 challenges, and then go ahead and pass that 3rd challenge, simply by putting the probability in his favor of that quick pass or fail time. Now, of course, if your strategy is simply not optimized, or you just truly aren't using a strategy that is going to work, this is not the case for you. But this is for those people who might find themselves stagnating. Kill the time that it is taking you to pass these challenges, get more repetitions in, more practice, and your edge will eventually prevail. I'm sure there's people out there who are trading like even me when I started. I would tell my friends, I would tell my family, I was very motivated. But then you have family and friends over your shoulder constantly asking you, oh, have you made any money yet? Are you funded yet? Did you pass any challenges? Whatever they're asking. Don't let yourself sit in this reality where 3 months is being spent on one challenge to pass or fail. Focus on those quick returns and short-term gratification, and you will be funded significantly sooner. Now, number 2, this goes back to what we just talked about, but specifically speaking on strategy. If you are finding yourself with some data looking like this and you find yourself stagnating, your strategy may follow one of these 3 things. There are 3 of the most common excuses here that I have written down. Number 1, people believe that their strategy is not too complex. In recent years on YouTube, the smart money space has been absolutely overloaded with new concepts and different concepts. Everybody seems to need to make their own new concept so they can stand out in marketing from the rest. Some of the biggest channels out there like ICT are dropping new and more complex topics every single year with new mentorships. It is an extreme pool of confusion, guys, and you may not think your plan is very complex, but if you find yourself not being consistent, that is the number one likely reason. Our entire brand is named Simple Markets for this exact reason. We have only 150 members in our community, and we have more of them funded than I have seen in 2,000 plus member Discord communities with some of the biggest names in the smart money space. This is just the reality of simplifying your system and what it can do for you. It is absolutely huge. And all I ask is for some of you watching this to maybe keep an open mind. If you are in that position of stagnation, take a look at your strategy. It may be too complex for you. And number 2 and 3 are kind of just an effect of that. If you constantly blame your trading performance or your lack of consistency on trading psychology, it once again ties back into the idea that your system may just be too complex for you. If the rules are very complicated, it is very easy to start missing winning trades, not being focused enough. Even some of you sit down for multiple hours a session and you're simply not able to focus for that long. And that also ties into the idea of not following your rules. If you have a journal where there's a whole separate column that is simply just based on did I follow my rules or did I not, your plan is significantly too complex for you. There is too many different variables in it. When you are using so many variables, like even multi-time frame analysis, it's very easy to go ahead and blame the fact that you took a losing trade on, oh, maybe the higher time frame wasn't in discount or premium. I'm going to write that down and say I didn't follow my rules. Or maybe my bias was wrong for the day because of this XYZ concept that I saw. I'm going to once again write I didn't follow my rules. You're now blaming yourself on this exterior motive of rules as opposed to just dialing in on the actual system itself and understanding that it is built too complex. Lower the amount of variables in your trading plan and you will see significantly more consistent returns. Now, this below is just kind of an example of the simple market strategy and the data with it on a random set of 12 trades, just based on the percentages of win rate, break-even rate, and losses. And you could see very easily that 8RR after a 12 trade sequence is more than enough to get that edge over the market and pass a challenge, especially going back to what we previously talked about using 2% risk. Now, I know that was a lot of information at once. We're going to dive into the actual approach in the next slide. This is the part you guys have been waiting for. And this is my recommendation for you on how I would pass prop firm challenges and what I recommend to my 70 plus students who have already done it. Now, this data here is just taken from the previous slide, assuming it is the strategy that you already use, something around that break-even level, or maybe you are in that stagnation where a lot of traders find themselves. And method A is what you do. You go here, you go to FTMO or whatever firm, you buy a single account, and then you trade it, and you end up at 0R at the end of the 3 months, for example. But method B actually takes this exact losing or break-even strategy and turns it into a profitable strategy that gets you funded. It is a very difficult concept for people to understand, but very simple. Instead of going out there and buying one 100K account because you want that quick gratification and huge money right away, you could do something like buy 2 20K accounts, 2 10K accounts, start small, buy multiple accounts, and then split the trades you take amongst the different accounts. So this is a 12 trade sequence where at the end of it, you would end with 0R, and you actually end up in stagnation for months with that first challenge approach. Now, method B is where you go ahead and you take every other trade on account A, and then every other trade on account B. So as the trades present themselves, you split them amongst the 2 different accounts, and you continue to do this throughout the challenge. When doing so, your results could look like this. Account 2 does get killed here, -6RR. Obviously, that's still possible to pass, but the idea is that yes, you are in drawdown now on account 2. But account 1, when you take every other trade in this randomized sequence of wins and losses, you will see that account 1 actually has a greater chance of passing, and using that 2% risk, you will get funded. So you took a strategy here that is essentially break even and hardly even profitable, and made it profitable by breaking the probabilities in half, splitting those trades against 2 accounts, and allowing for the probability of the edge to actually get you funded despite your strategy lacking in performance. We have students who do this with 2 accounts. We have students who do this with many accounts at once, splitting their trades amongst each one, increasing the odds that they will pass, and even mitigating their overall drawdown. One of the biggest misconceptions in the trading space is that if your strategy loses 10 times in a row, you can't get funded with it. That is probably the worst and biggest misconception that I see across the board, where traders just simply don't understand the probability of it. If my trading strategy can lose 10 trades in a row, but I buy 2 accounts and split the trades between them, it's putting the probabilities in my favor where that does not occur anymore, and I actually have the chance at passing 2 different times as opposed to losing when it would be a singular account. Learn to play the game and you guys will see far more success despite the strategy you are using. But of course, nobody wants to be using a break-even strategy, guys. If your strategy falls in this boat where you're constantly struggling or it may be too complex, download our strategy. It is literally free. I can't even begin to explain the amount of traders we have had do this and how many traders in our community get funded and payouts every single day. But here's a good example is our trader Paul. He passed phase 1 on a 10K account despite having a losing month. He said it was a down month overall, but when his trades are split between multiple accounts, some of the accounts can still be up, and he ended up getting funded in a losing month. We even have traders who have achieved payouts in a losing month for this exact same scenario. You could have a losing month, but because you are splitting trades against multiple accounts, the probabilities are divided, and there's some accounts that will be up while other ones may be down. But nonetheless, we have seen $12,000 payouts come through on a losing month for some traders, which is it really a losing month if you have $12,000 in your pocket now? This is the power of using this kind of delegation of splitting trades between multiple accounts. It's also the power of using a much more simplified and consistent strategy. Combine the two of them and you get results like we have, where people are making their first payouts ever. 𝐒𝐫𝐿 has since gone on to make over $14,000 with 𝐓𝐇MO, and his first payout was just in February of this year. I hope you guys appreciate me sharing some insight with you on how I would approach firms, how you guys can improve your chances at getting funded. If you are interested in that zero to funded program, definitely head over to our website. We guarantee get you funded or your money back. So if you want to check that out, feel free. Without further ado, guys, thank you all for watching. I'm going to head out here. I will see you all in next Monday's video.